guys, let us get over here to the S&P 30-minute chart. Reminder, reason being, it's our gift to every trader who sees in us something they don't find somewhere else and are willing to commit their time and treasure to studying with us, learning with us. And so we kind of see the weekly trading zones as a gift to show you that we really do appreciate you. And so partners and passport holders get the zones Monday morning, 6:15 a.m. Eastern. Plenty of time to get them on the charts before Wall Street wakes up. And then I share them with the entire CFRN community on Thursdays. This week, somehow I deleted last week's crude zones. So when we go to the crude chart, you'll see this week's zones. But on the other charts, we're still looking at last week. And as you can see, last week's zones do hold value. And Sunday night, we certainly use the previous week's zones. And then into Monday, Tuesday, and if you watch the numbers, watch the charts, you can tell, you can feel it when the new zones really kick in, kind of lock in a load, and then you just kind of push the previous week's zones aside. So on Thursday, when I do give out the numbers, I always say, jot them down, because even if you're not a partner or a passport holder, you've got the remainder of Thursday and Friday and Sunday night and into Monday that you can use and benefit from them, and you really get a feel for what they're all about. Only three things happen at a weekly trading zone: consolidation, rejection, and the slice. This is a perfect example here of consolidation. Now, what happened here, there's the gap lower open Sunday night. We know we've been in a sideways market, sort of a slow grinding sideways market since that gap lower open Sunday night. And with this old zone, price has been oscillating below it and above it, below it and above it, below it and above it. The zone sometimes can become a center of gravity, so to speak. We've broken free of that, jumped down to that zone below from last week, consolidated for 2.5 hours, made our move down, leg, pulled back up to that old zone. See, it was support coming down. It held for a few hours, but gave way. Now we need to check it, or the market needs to check and see, is this going to be good resistance if in fact it passes that test? And then the next high probability move is to the downside. Remember, price is always trying to get to a weekly trading zone. From Sunday evening, 6 p.m. Eastern, to Friday afternoon, 5 p.m. Eastern. Price on every one of these markets is either trying to get to the zone above or the zone below. And once I teach you how to discern which zone it's trying to get to, then it's just a matter of you applying a little logic, our methodology, and our indicators to pick out a entry that is both high probability and low risk. Now, just because something is the next high probability move doesn't mean it's always going to do it, but it does it more often than not enough so that you can call it the high probability thing. Okay, I gave you a shot a minute ago to grab a screenshot if you'd like of the Concierge Trade Alerts. Let's do that again real quick. Got them out last night at 7:15 p.m. These Concierge Trade Alerts are based on previous price behavior. Logic 247, which I showed you the recap of earlier, that's based on current price behavior. And when both the Concierge and the logic point to the same important price, important area, as they often do, that always deserves a second look, because it probably represents a high probability opportunity. Last night, we said to consider being short 29.27. That's right here. The trade to target on the Concierge Trade Alerts is always the zone above or the zone below. In this case, because it's a short alert, 29.27, the trade to target is going to be that zone below. Of course, partners and passport holders will be viewing this week's zone, and I'll just share it with you. They're not too far apart, okay? A couple points, all right? So, but from 29.27 down to 29.19, that's 8 S&P points at $50 per point. It's $400 per contract traded. CTA sell 29.27. Okay. The flip side was to consider being long 29.46. Now the alerts went out at 7:15. So that's going to be 1900 hours. It was during this 30-minute candle that everyone received the Concierge Trade Alerts last night. And the long side of it, 29.46. So that's going to be right here. $29.46. Okay. CTA. And the swing high was 29.49.50. So that's 3.5 S&P points, $150 per contract. For the 10 contract trader, that would be $1,500. But remember, you got to earn the, if you hang with us, you got to earn the right to go live, and then you earn the right to add each contract. It's very important from our viewpoint that everything beyond that initial contract that you go live with, when the time comes to add number 2 and number 3 and number 4, we want you to add it with profit you earned in the market. That is such a game changer. I can't think of a better way to grow and scale a business. When you can grow and scale a business based on internal success, internal profits, without having to go to someone on the outside, that's just a huge statement. There's very few businesses where you can do that. I mean, think of the guy with a hot dog cart. He sells a lot of hot dogs. He's very good. He makes a nice hot dog. We'll call him Nathan. Nathan saves his money and buys a second cart with profits he earned selling hot dogs. Now he's got 2 carts out there selling. Got an employee. Before you know it, he'll even have himself a clipboard. Pretty soon he won't be standing behind it, because when he gets the third one, see, he'll have 2 people staffing those 2, and he'll be over with his clipboard teaching the new person how to sell the hot dogs out of the third. You see, we're building a hot dog empire here. You thought this was about trading. All right. Thanks for humoring me. So, 2-sided action. $150 per contract to the upside, 150 plus. And from 27, all the way to the swing low at 94, I mean, that's a $1,500 plus per contract move. The number I gave you earlier was just based on just getting down to this zone, which you expect to be good support, and it was for hours till it wasn't. And then we came back up to test it. Looks like good resistance, especially with this red candle printing. Okay. If you have any questions on any of this, please put it in the chat box. Happy to answer. You're not going to interrupt my flow. Just ask and you shall receive. Okay. All right, let's go to the Dow. Okay. Concierge said to consider being short 26,245. That's about here. $26,245. Okay, so from 26,245 down to 26,100, that'd be 145 Dow points at $5 a point. So Alexa, what's 145 times 5?
145 times 5 is 725.
Okay, thank you. $725 per contract traded. Now, getting out of the swing low is typically only done by accident because we don't know it's a swing high or swing low till after the fact. But we do know something else. We know that important prices and important areas are almost always tested. So while we didn't quite get to that trade 2 target yet, let me check something. Well, partners and passport holders do have a little different trade 2 target than what you see on the screen here. And well, they got it. Okay, we got it. You can get it. You know, when you take the trial with us by going to eminitrainingschool.com, you have access to everything we do for the whole week. Concierge Trade Alerts, Logic 247, our indicators, our strategy, group training, one-on-one private training. And we treat you like royalty for 5 trading days. And it costs you a good attitude and your undivided attention. Pay the man at the door. Okay? That's all. No credit card required. So the high probability move from here would be, here, let me throw this on there. Look at that. We rally up, we hit the BBC, just stands for bull bear cross. Prices above it, we anticipate higher prices. When prices below it, we anticipate lower prices. We expect price to go from zone to zone, all of that. So we're up against what we anticipate right now to be good resistance. Okay? The high probability move is back down through 26245 with our sights set on the current weekly trading zone below there, about 90 points below, I think. Now, as we come down, this blue and climbing CFMA1 has the potential to serve as good support, just as we expect that to be good resistance. As we're coming down, we have to keep in mind that as we touch that, it could become good support, which changes things. Okay? Which is going to happen? No one knows. I don't care what they tell you, no one knows. Because it's unknowable. God, in his infinite wisdom, did not give man the ability to change the past or know the future. And those two things are inextricably linked for eternity. You can spend all the time and treasure you can get your hands on, and you won't find anything, not a man, not a machine, not an algorithm, an indicator, or an oscillator that can consistently tell you what's going to happen next. Now, we tell you every day what the next high probability thing is, Doesn't mean it's going to happen, but it happens more often than it doesn't. That's why it's called the high probability thing. So, I mean, we're printing green here, right? So, why am I thinking short? Here's what would change that. The narrative would change. If we continue to print green, then we open a candle up above, we pull back to the top of that green line, the BBC, it holds, and as we go up, we come back, we start to move higher, everything changes. Then we're looking at the long side, with this zone being the trade to target, okay, the current zone. And this area right here is key. If the market can put together a rally to the upside, right there where that bearish cross happened, 26475. If we rally, watch for resistance right at that spot. Okay. And then the long side for the Dow was 26495. So that's, I'm going to have to open this up a little bit. 26495. Right about there. Ooh, I got close. 26495. Close enough. All right, so from 26495 up to 520. What is that? 25 points, $5 a point. Important prices, important areas, almost always tested. We run into resistance, which we anticipate at a zone. We get back below the trigger, hit the BBC, which we expect to be good support, which sends us back up to that zone, which we expect to be good resistance. So the market handed us the same identical move twice. Go back and look over time, whether you're a current member or a prospect, as they call it. Go back and look at every Concierge Trade Alert and every Logic 247 alert. And what you'll see in the recap is what happened on just the first trigger. In the beginning, I tried to recap the multiple triggers. It's just too much. You'll be amazed at how many times price comes back to that trigger, triggers again. There are times that you just get one trigger, but more than 50% of alerts will offer you 2, 3, 4, multiple opportunities. So 2 trades to the long side, 2 opportunities to the long side, 1 to the short side. If we take out this swing high on this little rally here, okay, that's not the game changer. Remember, we need to hold a pullback like this. See, price is up. See, we've been below the BBC. Now we're challenging the BBC. Each one of these candles is still touching the BBC. When price gets up and away from it, and then pulls back and holds like it did here, that's when we would get involved to the upside, to that spot right there. Okay. But this whole screen, that's the war. I don't really like war terminology because I like to think more of the market as my business partner, not the enemy. Okay. So when I use the war analogy, we're on the same side as price. But if this is the war, and this is the skirmish, this is the little battle that we're in right now, how long will it take to sort it out? It takes as long as it takes. But I can tell you this, until it makes up its mind, there's no high probability opportunity. Not yet. if things unfold the way I suspect they might, price will come back down and will trigger. There'll be a speed bump right in here. If we can overcome that speed bump, and we'll be looking at the zone below. Okay. All right. Let me pick up the pace here. Go to the Russell. Get rid of the fibs. Go to a 30-minute. And I just deleted last week's zones from this chart because I was talking to John. So last night, the Concierge Trade Alert said, consider being short the Russell at 1490. The Russell did lead to the downside this morning. 1490 on the nose. Okay. Okay. All right. So from 1490 down to 1470, that's a 20-point move. The Russell pays $50 per point. Let me put this. I've got this on the continuous symbol, which gives you more data. But you can't trade the continuous symbol. You have to use the front month, which is Z for December. There you go. So 1490 down to 1470, 20 points, $50 a point. This is a $1,000 per contract move. For the trader who's put in the time, done the do, and has earned the right to trade 10 contracts. That's a $10,000 move. How much does it cost to trade 10 contracts during the day session? $5,000. $500 per contract. That's the margin. Now, I know that's very alluring, seductive even. Keep your hand off of that mouse. Your quantity, if you're out of SIM and you've just gone live, that quantity needs to be at 1. Okay? Our 2420 blueprint maps it out pretty good. When you first make your commitment that you're going to hang with us and learn the CFRN E-mini method, we want you to put together 10 consecutive days in a row in SIM where you reach your goal in 10 trades or less. Once you've accomplished that, the blueprint will give you the green light to go live with 1 contract. We want to see you increase your account balance by $2,000 before you add your second contract. In doing so, that second contract and every contract hereafter is being added with profit you earned in the market. Just like Nathan and his hot dog carts. Okay. All right. Long side of the Russell, 1501. That's right here. 1501. Okay. And we put in a swing high at 1505.40. So 1501 to 1505, 4 points, $50 a point, $200 per contract traded. Let's go to gold. I'll clean this up a little bit. I'm going to take this trend line off, but remember, we popped out of the channel. The first time we came back and kissed the top of the channel, the Trader Vic, we caught the bounce. That's what a Trader Vic's all about. You break out, you break that trend line, come back, kiss the top of it, keep going. So we didn't go very far. Got to the zone. And by the way, this particular zone just so happens to be a zone last week and this week. Okay. But now we're back inside of the channel. What channel? Here, I'll show you. Got the trend line. Remember, it doesn't have to be perfect. Highlight it. Control C. Control V. So what the software did was it created for us a trend line at the exact same angle. So don't grab it at the end, because you'll change the angle. Just grab it in the middle, drag it down, slide it into place. So we went from the bottom of the channel, the top of the channel, to the bottom, to the top, to the bottom, to the top, popped out of the top, pop back in. Technical Analysis 101 says when you have a channel like this, when price gets to the middle of the channel, it's a 50-50 coin flip, whether it's going to continue to the bottom of the channel in this case, or just flop around or head back up. So if that's true of the halfway point, what do you think the probabilities are? In this case, we'll use this as an example. Once you get to the middle of the channel, it's 50-50. But what happens when you get below the middle of the channel? Do the probabilities change? Is it different than 50-50? Yeah. Once you get below that halfway point, middle of the channel, the further you get below the middle, the higher the probability that you're actually going to get to the bottom of the channel. Here's a kind of a fair example. Went from the bottom to the top, came back kind of to the middle, right? Flopped around a bit, went back to the top. See, went from the bottom to the top to the middle, back to the top, then to the bottom, and then back to the middle, flop around a bit, back to the top, back to the middle, flop around a bit, back to the bottom. Okay. All right, last night, Concierge Trade Alert for gold said, consider being long at or above 1509.
New visitor.
1509. All right. 1509, where are you? There we go. 1509 up to the old zone overhead, which is also this week's zone. 2 points. That's $200 per contract traded. Now on the first trigger, the swing high was $140 per contract. Then we triggered again, and this time we went from 1509 up to 1512. So that's $300 per contract traded. Let me open this up so you can see it better. There we go. Okay. All right. So there's the initial trigger. Back below the trigger. Now this time we take a $300 per contract ride. Back below the trigger. Another $300 per contract ride. Back below the trigger. And this time we take a $500 per contract ride, and then back below the trigger, and this trigger went south. So 1, 2, 3, 4 tradable opportunities, and then old number 5. If you're in old number 5, you got stopped out. That's the truth about trading. You will get stopped out. Stop looking for stuff that doesn't exist. I know the promises are so, it's a siren song, and you know about all the sailors that would hear, in days of old, would hear that siren song and end up dashed upon the rocks. It's just like that here. Because there's I got to tell you, even to this day, there's still some little part of me, part of the human condition, part of the lizard brain, that it just feels like there should be something, some indicator, oscillator, filter, something that gives me the ultimate definable edge. When in fact, what I would be looking for is the ability to know the future. And God said, no, we don't cross that line. You can do great things, man. I need your help building my kingdom on planet Earth. But I'm sorry, I'm not giving you the ability to change the past or to know the future. And the two are inextricably linked for eternity. And that's a long time. All right? Okay. All right, so that was the long side of gold. The short side was 1490. Haven't been there. Not an issue at this point. So we had two-sided action on the S&P, two-sided action on the Dow, and the Russell. Gold only triggered on the long side of the Concierge. Now, while we're detailing these Concierge alerts, just don't forget that over here, running parallel to that, see what I'm showing you now is based on previous price behavior. These alerts, these numbers, previous price behavior. But running parallel to that are these, which are based on current price behavior. In the moment, real time, as it happens. And when the old and the new both point their finger at the same price, same important area, it's always worth a second look. Okay? All right. Next. Okay. Here's gold making its move up, a little arrow. Get above the trigger, challenge this, challenge that. A lot of blue sky overhead. Okay? All right, NQ. Again, these are last week's zones. So last night, the Concierge said, consider being, hang on, I gotta go back to that page. There we go. NQ, long at or above, 77.68. 77.68. Ooh, that's going to be a close call there, huh? Let's just swing low. Haha. 77.68. Come on, line up. 77.68. Okay. So from 77.68 up to 77.83. Alexa, 83 minus 68. Is that 15?
83 minus 68 is 15.
Okay, cool. Thanks. And at $20 a point, that would be $300 per contract traded. Price then got back below the trigger by a few ticks and gave us that same ride again. Trigger, back below the trigger, trigger again. And on the NQ, Concierge also said, if you get a chance, consider being short at 77.17. Right there. Yeah. 77. Okay. Alexa, 77.17 minus 76.40, please.
7,717 minus 7,640 is 77.
Thank you.
Anytime.
77.
Have a good morning.
You too. Now that's 77 NQ points The NQ pays $20 a point. Alexa, 77 times 20, please.
77 times 20 is 1,540.
Okay, this is a $1,500 per contract move.
I'm not quite sure how to help you with that.
You're doing fine. Thank you. $1,500 per contract move for the trader who's earned the right to trade 10 contracts. That's a $15,000 move. Alexa, what's the poverty line in America?
According to another Amazon customer, persons in household 2017 federal poverty level Medicaid eligibility, 138% of FPL won $12,060, 16,6432,
Alexa,
16,000.
Please stop. Sometimes she goes off on a tangent like that, spins out of control. See, when that happens, you just got to word it differently. Alexa, in America, what is the income poverty level?
Sorry, I don't know that, but I
Okay.
do have a skill you might like. It's called census stats. Want to try it?
Sure.
Okay, here's census stats. Welcome to census stats. Ask for a stat about any state or city in the United States to get started. As of now, you can ask for the population, median income, poverty rate, percentage of citizens with a high school degree, percentage of citizens without health insurance, median housing value, number of housing units,
Alexa.
number of companies.
Phoenix, Arizona, poverty rate.
Sorry, I'm having trouble accessing your census stats skill right now.
Okay. All right. Well, thanks for all your help. All right. So I just want the poverty level in the U.S. Poverty line. There we go. Popped right up on Google. 2019 Federal Poverty Guidelines chart. For example, here, let me just show it to you. '19 Federal Poverty Guidelines chart. For example, the poverty level for a household of 4 is an annual income $25,750. To get the poverty level for larger families, add $4,420 for each additional person in the household. Okay, so in a home with 4 people, if they have an income of $25,750, that's the poverty level. Alexa, define poverty.
Poverty is usually defined as the state or condition of having little or no money, goods, or means of support, condition of being poor. For more, ask me to give you more definitions for poverty.
We got it, thank you. I think that pretty much says it all.
Anytime.
That's depressing. Alexa, what's the average annual household income in America?
Here's something I found from the article
Oh,
Household
Lord.
Income in the
Here we
United
go.
States on Wikipedia. Overall, the mean household income in the United States, according to the U.S. Census Bureau 2014 Annual Social and Economic Supplement, was $72,641.
Okay. Now that's 2014 data. I think we could probably do better than that.
I'm not quite sure how to help you with
Okay.
that.
All right. Thanks. Average household income, U.S. 2019. That's the number she gave us was 70 something for 2014, and here's 2019. 63. Median U.S. household income, 63,179. This is from 2017. Okay. Now, All right. So if your household, so maybe you and your spouse work, I think most homes today, unless you're retired, have two incomes. When I was growing up, of course, most of us, when we were growing up, that wasn't the case. If your mom had a job, it was probably selling Tupperware or Avon. My mom actually had a factory job and sold Tupperware and sold Avon to try to make ends meet. We grew up working class poor, and I'm not ashamed of that because it gave me a real good work ethic. I watched my dad, both of my grandfathers, and my mom work hard to build a life. None of them had any higher education. My mom, I think she got her diploma at night school or something. I think she graduated high school. My dad graduated. Nobody in my family's ever gone to college. Nobody, not even me. The Navy offered to put me through the Naval Academy, and well, you know, Dwayne, I screwed that up. But anyway, so average household 63,000, poverty level. What was that again? Poverty level 25,000. And I went after those figures just to once again put this in perspective. For the 10 contracts, and remember, it costs, during the day session, it costs you $5,000. You got to have more money in your account than that. And I'm not suggesting anybody do this. I'm just trying to help you understand it. You got to put $5,000 in margin to trade 10 NQ contracts, $500 a piece. You got to have room for drawdowns and all of that. But if you're trading 10, this is a $15,000 move. Okay, from the entry, we didn't get all the way to the zone below. Let me check and see if we got to this week's zone. 76. Yeah, we did. Okay, so this isn't to encourage you to go live too soon. This is actually to beg you not to go live too soon. I want you to see the potential. I want you to see the possibility. You know, the only difference between big dreams and small dreams are the people who dream them. Do not shoot yourself in the foot by going live too soon or trading above your pay grade. Be patient. The market shows up for work every day. So you don't have to worry about that part of the equation if you ever run a business, if you ever had employees. I used to wake up every morning with a knot in my stomach, you know, and before the sun rose, my phone would be ringing. I'm sick. My grandma died. Your grandmother has died 9 times since I hired you. What's going on here? Is she a cat? I mean, frustrating. Market shows up every day. You don't have to worry about it. You don't have to pay health insurance, no benefits, no lunch break. The market just does. What a powerful tool we have at our disposal. It's free. We have this incredibly powerful tool. It doesn't cost you anything. Yeah, you got to pay for data. All right. Electricity. Right. You follow me here? Don't mess this up, please. Don't go off half-cocked. Just because there's a low barrier to entry, so many people, because there's a low barrier to entry, and what do I mean by that? You don't need any special license. Don't have to pass a test. If you got about $3,000 to put in an account, you can call yourself a trader. Now, just because you have money in an account somewhere does not make you a trader. You can get a little t-shirt that says trader if you want. But, please hear what I'm saying. This is too good to screw up. If you don't get an education with us, please get one somewhere. Find somebody that is more interested in you than your money. Someone who will actually share with you what they know about markets whatever that is, get an understanding for how markets work. Now, we're happy to be the ones that teach you, but if you want to go a different route, that's okay. Just please get an education somewhere. Because if you just start throwing money at the market, hoping you're going to get lucky, you're going to get about as lucky as everybody that ever went to Vegas. Sure, you may get on a winning streak. I hate that term. I don't win money in the markets. I earn money. Huge difference. Just don't mess it up. Whatever money you have to back your trading business with, to get you to that first contract, because if you follow the blueprint will help take care of the rest. You gotta muster the money to fund your account, fund your education, and pay for that first contract. Okay? Beyond that, it's kind of on autopilot. You show up, you get your goal for the day, and put the mouse away. And you just keep showing up every day like the market does, doing what you've been taught how to do. See, that's what's so critical, is you need somebody to teach you how to do this. If the pipes are busted in your house, what are you going to do? You're going to try to fix it? If you're like me, I'm going to run out to the street with a monkey wrench or the side of the house. I'm going to try to turn the water off, so my house doesn't fill up with water. But no, I'm not qualified to fix my plumbing. If I wanted to learn, I guess I could, but I don't have the desire, and I've never been taught, so I'm going to keep my hands off of it. Would you, if you had a Cessna outside your front door, and you think, man, it should be nice just to kind of just fly around the city and see what it looks like, would you dare get in that thing and crank it up if no one had ever taught you how to fly? Of course not. Would you try to perform brain surgery on yourself if no one had ever taught you? That's a trick question. Of course you wouldn't. Don't try this at home until somebody teaches you. Doesn't have to be me, doesn't have to be Michael. But please. Because see, there's a much bigger picture here. I put up a post yesterday in, where did I put that? Oh, it's on iTunes. It's on our blog. In fact, hang on. I'll show you how to find it. Ministry costs money. Ministry costs money. Emini solution? Question mark. You can read all of this later. I'm not going to read it to you now. Or you can just go to our blog, CFRN.net. And when you get there, click Emini Radio blog and view recent posts. I'll share just a tad with you. If you've ever been actively involved in any type of ministry, you know what the title of this article means. If you're new to the faith, your day is coming when you'll be asked to join in and pitch in. While the brick and mortar building we call the church does require a consistent capital infusion to pay for everything from electricity to staff salary, we'll get to that in another article. Today I want to talk about the cost involved when you or a group of you decide to do something big for God outside the walls of the church. Now, Jesus was always big on feeding the hungry, reaching the lost, teaching salvation. Now, while anything Jesus did is a good example for you and I, we're going to encounter an issue that he never did. In fact, because Jesus not only understood the power of money, as God, he had power over money, so he never showed up a day late and a dollar short, like you and I. Ministry costs money. Now, this is a pretty long article, so I'm not going to read it all to you, but you're free to do that. Now, I said all that to say this. If you're listening to this radio broadcast or podcast after the fact, or if you're thinking about CFRN as your way to learn how markets work, it's probably because we share a similar belief system. We study the same good book, right? Missionaries, often, people who dedicated their life to reaching the lost for Christ. They have to spend 9 months here in the States with their handout, trying to raise the money so they can go back to the mission field for 3 months. Christians historically have funded God's work by fetching and stepping with hat in hand in front of corporate America asking for a handout. I'm sorry, how bass-ackwards can anything possibly be? He's the creator of the universe. He's the architect of everything you can see and even the stuff you can't see. If he sends you on a mission, should you have to go beg, possibly even from a non-believer? Hey, I serve this big, huge, powerful God, and I really want to do his work, but I'm busted. Could you spare a few bucks, for the kingdom? Get out of here. No. We got it wrong, people. We, the believers, we got it wrong. God gave you some kind of talent. You may not have been born to trade. Some of you were. Some of you weren't. You're going to have to figure out who you are. And you're going to have to figure out what abilities God saw fit to put in you as he formed you in your mother's womb. Some of you can sing very prettily, beautifully. Some of you can play professional grade sports. Some of you have the ability to steward a Fortune 500 company. If you don't know what your gift is, you need to find out. Whatever your gift is, that's where your strength lies, and we need to always play to our strength. Okay? That means that some of us probably won't end up trading for a living, even if we have a teacher. I don't want to cut anybody out, but I'm going to tell you something. In 2006, I was squirming. I was trying to learn how to trade Emini futures. I couldn't get most traders to give me the time of day. Mike Reed did. And he said something one day that not only pissed me off, it set me free. And I was frustrated. I was aggravated. I was probably even constipated. I don't know. I was a mess. And he said, Dwayne, not everybody can become a professional trader. Oh man, that thing flew all over me. I was mad. I tried not to let him know how angry he had just made me, because I had a lot of respect for him. Boy, that gave me something to chew on, something to think about. That's when I had to dig down deep inside, take a fearless and searching moral inventory to find out if, God, have you put this in my path for a reason? Or did the enemy do it so he could poke fun at me? After much soul searching, I came to the conclusion that while what Mike Reed said was true, it didn't pertain to me. I was positive that God had pointed me in this direction for a reason, and that he had my back. Now, God's never going to move the market for you. You get upside down in a trade, all the prayer, all the screaming and squalling and wailing and gnashing of teeth, and the bargaining, the bargaining. He's not going to move the market for you. He can't. It goes against who he is. Two traders walk out of a bar. They both go back to the office. They both trade the S&P. They both love Jesus. One goes long, the other goes short. Who's God going to bless? See, the day the Holy Spirit dropped that little gem into my spirit, that also helped to set me free. Because I could see clearly I was approaching it the wrong way. I mean, who's God going to favor of those two traders? The one that, prays the most, or maybe the one who tithes the larger percentage of their income? That's not how it plays out. So, that day I had a very long heart-to-heart talk with God. And it's like, I can't believe you got me out here and you're going to abandon me. You've clearly shown me you can't move the markets to help me. Well, what am I supposed to do? Clear as a bell. Learn how to trade. Oh. Learn. See, I was looking for magic. I was looking for some clever thing. Indicator, oscillator, fib, whatever. Some little parlor trick that I could pull day in and day out and convince myself I was a trader. No. The only way to become a trader is to learn how to trade. And in order to learn how to trade, you're going to learn how markets work. Now, back to this ministry that you may be involved in, that God's called you to. Not everybody's called to build an orphanage the way my wife and I did. You may be called to do something not halfway around the world, but on your street. Being a missionary has nothing to do with your geographical location. It has everything to do with the mission you're on. Okay? So, will every believer find a solution to the ministry cost money dilemma via E-mini futures trading? No. I'm sorry. I wish, but that's not true. Okay? But some of you within the sound of my voice, you've been selected, hand-picked. As you were being formed in your mother's womb, God gave you what you need. For some of us, it's trading, yeah. Others, again, professional grade sports, run a Fortune 500 company. You got to find your gift, what God put in you. If you ask him, he'll probably tell you or show you. But you got to keep an open mind. And remember, when we ask God the tough questions, we don't always like what we hear, because it's not what we want to hear. But whatever he speaks is truth. So with a broken and contrite spirit, you go before him. If you don't already know, you go before him and say, hey, God, I'm all in. I want nothing more than to serve you, serve man, and build your kingdom. But I don't know what I'm good at. What did you put in me that's unique, that's different, that's powerful, that smells like you? My eyes don't see so good anymore, God, and I'm a little feeble in my hearing, but if you shout real loud, I'm going to hear it, and I'm going to latch onto it, and I'm going to run with it. Now, if the answer comes back that you're on the right path, and that trading is a way for you to support your ministry, whatever it might be, don't screw it up. Never before in the history of man have believers had the kind of opportunity that you and I have today as we sit in front of these electronic markets. FIFO, first in, first out, no middleman, no manipulation, none of the garbage that ran me off from equities. Honestly, the naked short selling. Emini, 100% electronic. Level playing field. If you're trading one contract, you get the same respect as the trader from Goldman Sachs that's trying to buy 10,000 contracts. No cutsies. If you're next in line, you get filled next. You need to talk to God. Don't ask man. Don't let man fill your head with nonsense. Get it straight from the source. And then once you know and know for sure, okay, now figure out how you're going to move forward from that point. When he spoke to me and told me that yes, he called me to trade, but that I had to actually learn how to trade. That was my marching orders. Okay, I stopped looking for magic and I started learning. Okay. Now, if your call is to steward a Fortune 500 company, you're probably going to have to get a master's degree in something. There's things you're going to have to do to prepare yourself for the task ahead. If you have a beautiful singing voice, you're going to have to practice. You may have to go on the American Idol or The Voice. I don't know. You'll find your way. Trust me, if it's what God created you for, and you agree that, all right, God, I see what you're doing here. I see what you did. Let's go. Man, when you've got his hand at your back, he's so close. You can feel his breath on the back of your neck. That's where you want to be. Under the anointing. So if it turns out it's not trading, don't fret. He has something else for you. Maybe something bigger, far better. Don't question him. He's God, and we're not. It's probably one of the things I'm most thankful for every day, that I'm not. I don't want to be president. I don't want to be God. It's just too much. Too much for me. All right. Now, in Q, we covered it. We got one more to go. Crude. After crude, we're going to go to the good word for the day. And then I got to scoot. Actually, I want to put that on. I want to start out here. Let's do this. Let's change this. Come on. I want to look at this on a daily, because I think we got a big move coming in crude. I want you to see it. All right, let's get rid of all drawing objects. All right, we're on a daily chart of crude. We'll go to the 30-minute here in a second. Take a look at the alert. We had a gap higher. We had a huge gap here back on, when was that? September the 16th. Sunday night. I remember. Okay, so let's go from here. Swing low put in December of last year to the most recent swing high on a daily chart. Where are we right now? From December of 2018 to April of 2019, we've drawn back to the 62% Fibonacci retracement and held. See the double bottom here? Off we go. Back up to the 24% fib, which turned out to be good resistance, which sent us back down to the 62, which sent us up to the 38, back down to the 62, back up to the 38, back down to the 62, back up to the 38. Now, I talked about this the other day. When the market has difficulty getting through a particular area, in fact, we talked about this in detail the other day. When the market has difficulty getting through an area during normal trading, it will often accomplish the objective like this. Try to get through, try to get through, try to get through, try to get through. This is getting old, so you just jump over the obstacle. Well, we jumped over the obstacle and ran right into another obstacle. A right shoulder. Head, shoulder, shoulder. Resistance, resistance. Okay? So we gapped over the obstacle, ran into the obstacle, all in one day, one session. Now we've peeled all the way back down to the 62. Okay? Okay. All right, let me make these go away. Make this go away. No. Here we go. Now, we looked at the whole picture. Let's look at the last leg. You can see where I'm going with the last leg business here. From the low to the high, basically what we've had here is a 100% Fibonacci retracement. From the low to the high, ran down to the 24, to the 38, consolidated, down to the 50, caught a bounce, down through the 50, 62, consolidated it right there between the 50 and the 62 for 1, 2, 3, 4, 5 sessions. Now we're back down here. Now, what do you think the next high probability move is? Just think about it for a minute. It's either up or down, right? Of course, we can go sideways for as long as the market needs to go sideways. Is it a higher probability that we're going to go back up and challenge this area? This area. We're going to challenge this area. Oh, don't do that. Or are we going to fall through this support? It was support in June. It was support in July is support in August and in October. Today's the 8th. So think about it. Next high probability move. Do we go back to this area, or do we take out these lows? Let's go to a smaller time frame and address it. In fact, we'll address it from right here. I'll just change the time frame. Now I got to get rid of all this stuff. Hold on for me just 1 second. Give me 2 seconds. I'll be right back. Okay, I'm back. All right, so because we're going to change time frames, so we're going to just get rid of all our drawing objects. Okay, let's drop to a 30. Okay. Now keep that mental picture of what the daily looks like. Okay. Now, I already put the zones out to everybody on crude, as I explained earlier, because I accidentally deleted them. So, $52.30/52.35. A lot of good support there. We spiked it. It held. We spiked it. Okay. Zone overhead. Zone, zone, zone. It's 45/50, but you know that. And below this one, we've got this. Okay. Now, an hour ago, when this candle was building, we consolidated here. Pretty obvious price, trying to get to the zone overhead. There's, 19 minutes left in the life of this candle. But we didn't get all the way to the zone. Zones are an area. Got to remember that. Okay. So what's the high probability move here? Do we take this out and march to the zone overhead, or at least attempt that? Or do we come back to this zone? What does price always do? Beyond, price is always trying to get to a weekly trading zone. What have you heard me say again and again? Price always reverts to the mean. And in our case, the mean, the green line, the BBC, bull bear cross. When price is above it, we anticipate higher prices. When price is below it, we anticipate lower prices. The high probability move right here, right now, is 52, 55, down to 52, 45. But there's an issue with that. Price is above the BBC. When price is above the BBC, we don't sell. And when price is below, we don't buy. That requires discipline. Because it's clear as day what's about to happen, right? Right? Yes. You see, consistency in trading is critical. Mark Douglas taught, the consistency you seek is not in the markets, it's in your mind. That's where you won't find consistency in the markets. Yes, the markets do the same thing every day, but they do it each day in a little different way. The market is consistently inconsistent. But yet you and I, we want consistency. If we want a consistent result from the market, we have to bring to the market a consistent effort. Day after day after day after day. This is a business based on probabilities. You can scoff at that, just like you can scoff at gravity and karma. Don't go near the edge of a tall building, though. And be nice to people. Because gravity and karma are both real. Now, some people go, oh, he said karma, that's New Age. Please. Have ye not read, whatsoever a man soweth, that shall he also reap? That's the definition of karma. You don't have to burn any incense or play the flute. Or wear a crystal. But you can. I mean, it's not a problem. Okay, so high problem moves here, but we don't. But that's not our method. Are you with me? I understand what it's trying to do. And it's a high probability it will do that. So I'm going to let it do that. I'm going to let it do it. And when it holds, starts to move higher, I'm going to have a bullish cross. And I'm going to be trading with the flow of the market. Would most people consider this a valid opportunity to go short? Yes. But it doesn't fit with our method. I don't know if that makes sense or not. Someday it will. Unless you stand for something, you'll fall for anything. The world of trading is just chock full of so many unlimited possibilities and opportunities, and man, you can just grab that mouse, do anything you want, as long as the money lasts, right? What we teach is a methodical, logical way of flowing with the rhythm of the market. Now, last night, Concierge Trade Alert for crude. This is our last market. Consider being short 52.55. 52.55. Come on. All right. Very close, right? 52.55. You get the idea. All right, 52.55. We're below the BBC. Now, this alert was put out way back, what time did I say? 7:15 Eastern. So that's 1915. So, there's 1900. Right here. Okay, so as this candle was building, that's when the Concierge Trade Alerts came out. The long side was 53.25, which the swing high was 53.27. Potential to get stopped out there. Swing at 53.26. In the moment, you could have stopped out there. From this vantage point, from the historical vantage point, and don't forget, anybody can look like a genius with a historical chart, okay? That important price, important area, the one that said, consider being long at or above 53.25. Even though there was a potential to get stopped out here or here, can you see the importance of that price in that area? Now hold on to your hat because I'm going to blow your socks off. Look at this. Say what? The price and area that the bearish cross took place has far-reaching implications. How far? Well, this far. Everybody said, whoa. Yeah. Whoa is good. Okay? So, if this was the decision point where the market said, I'm going from here to here, as I approach that thing, I'm going to be very cautious right here. Yeah, I've got a trade 2 target overhead at 53.45. But before I can worry about getting myself to 53.45, I've got to make sure I get above this. Because this has the potential to do this and this. You with me? Okay. So now this number was 52.55. Alexa, 52.55 minus 51.90.
5,255 minus 5,190 is 65.
Okay. 65 ticks, $10 a ticks, $10 a tick. So from here to here, $650 per contract traded. Important prices, important areas are almost always tested. So we get back above the trigger, do it again, but there's a different dynamic this time. Here, price is on the left side of a red and falling CFMA1. When we trigger this time, what does price run into? A blue and climbing CFMA1. And what does that have the potential to do? To be good support. And it was. So much so that it pushed us right back up above the trigger. Now we're getting ready to come at it a third time. If you trigger in here, is there enough room to run before you get to here? You have to make that decision. You have to call that shot. I'd much, rather than having to fidget and furrow my brow over this, I'd rather wait for another one of these. That's just sweet. Right? Okay.